Hello, everybody, and welcome to another edition of Financial News with Leonard Rosen. You know, people have always said that they come to our program to get relevant, real-time information regarding investment opportunities, and I'm happy to say today we have Sunil Saxena from Saxena Capital Partners, who flew into our studios here in Los Angeles, all the way from Washington, D.C. Sunil, thank you for joining us.
Thank you, Leonard, for having me.
Well, it's my pleasure. Sunil, I want to talk a little bit about your history because it's actually kind of an interesting history how you got into the private lending aspect. Tell us a little bit about being a medical doctor and your path.
Right. Yeah, actually, as you mentioned, I'm a medical doctor. I graduated from medical school when I was 23 years old, so pretty young. My mom's actually a pediatrician, so I kind of followed that a little bit. But my dad's actually an architect, so I think I've always been around real estate, construction, building. Actually, even as I was growing up, I remember being this tall, and my dad, we were actually building our own houses. So as I grew up, we were living in those houses that I guess we built. He designed and we built. So I've always kind of had that, and kind of had a passion for it, and in the last 5 years, I've been strictly focused on real estate development. 100%. I actually have not been practicing medicine, so kind of an interesting background. It's been a long ride, but fun.
So board certified emergency medicine, from what I understand.
Absolutely, board certified. I still have my certification. Like I said, I don't practice anymore, but practiced for about 8 years actually. So.
All right, good. So there seems to be a lot of buzz in the marketplace, especially in the DC market, about this new fund that you created. So talk to me a little bit about the different companies you have, because you didn't start off in the private lending sector.
Correct.
Did you start off with Saxena Custom Homes?
Yeah, actually, great question. I actually have kind of 3 different companies right now. I have Saxena Custom Homes, as you mentioned, which is my custom home building company. We, for those of you that know Washington, D.C., we build kind of the close-in suburbs, Vienna, McLean, Arlington, very kind of, I guess I consider low-risk areas, values don't really drop, very stable even through kind of bad times. So we've got that company that does custom homes. I've got a company called the Saxena Company, which is more my kind of real estate development. We do small commercial projects. We have a number of condo conversion deals going on. So those are my main 2 things. And then we started Saxena Capital Partners, with your help, we started it, and that was last year we started it, and we've been looking for investors, and it kind of everything kind of goes together, which is really nice. Is that we've got the real estate development expertise both in the residential and commercial end, and now with Saxena Capital Partners, we're able to bring extra capital to this whole thing, and it really is going to become synergistic, I think, and really allow us to do a lot of great developments.
So do you feel that the D.C. market, and when we refer to D.C., we're really talking about Washington, D.C., Virginia, and Maryland market?
Absolutely, correct.
Okay. Do you think that market's underserved for private lending on commercial properties?
Absolutely. I mean, we just literally have just kind of announced that we're doing this, and we've already got proposals in without, just literally, but just maybe telling a few people out at meetings and stuff like that.
Okay.
So I think it's very underserved. And the other important point is that the DC market, I think, is doing really well. I mean, it could be the #1 real estate market in the country right now. It's really, values are going up. It's just really working right now in DC.
So you're saying that's a stable market?
I think it's a very stable market. In fact, what we're seeing is actually price appreciation right now, and some of the areas in DC have actually already gone past the pre-recession numbers. So they've already are not only recovered, but they've actually even gone past it. Some areas, not all. As you know, in real estate markets, the core markets, the top markets kind of recover first, even within the DC market, and then the maybe fringe markets, they kind of lag and recover after those. So.
Okay, so. We helped you do a fund, certainly with the help of John Hornick, who did the legal part of it. Talk to me a little bit about how the fund operates. What kind of real estate assets are you lending or acquiring? What's in it for the investor? How does How does the whole thing work and get put together?
Right. Yeah, as you mentioned, with your help, and John Hornick, who's our attorney out of New York, he's done a great job for us putting the fund together. Basically, it's 100% real estate. We're not doing anything else with the fund except real estate. We have kept the fund a little bit open so that we can do hard money loans, as you mentioned. So if someone comes to us with a great deal, we can lend on it. I think some of the other funds you've set up have just focused on that. What we've done is we've actually focused on that, but also can do our own projects if we have great projects. If someone else comes to us and wants to JV on a project, we can do that as well. And I think because of my 15 plus years of real estate development experience, specifically in the DC market, I think we're able to do that. We know a good deal when it comes to us.
Okay.
In fact, I was just evaluating a deal, I think, a couple days ago before I flew out here. And we know right away whether it's a good deal, so we can structure it as either a hard money loan if we need to, we can JV with them, or we can just take over the deal. So we've got some flexibility, I think, because of the background that I bring to the fund.
So for our viewers who may not be aware of what a hard money loan is, it's essentially a convenience loan.
Correct.
It's a loan that is provided by a private money lender, such as you, primarily on a short-term basis. Mm-hmm. With low loan-to-value ratios. We'll talk about that in just a moment. Mm-hmm. And it gives the investor an opportunity to participate in a fund, a diversified fund, mm-hmm. that gives them the safety of if one loan, for example, didn't perform as well as the others, mm-hmm. the dividend yield isn't really affected. Mm-hmm. And the investor, on the other hand, is holding first trust deeds.
Correct. I think a couple important points you mentioned there is that definitely first trust only. Anything we do is first trust. So
no second deeds of trust, no thirds?
Nothing at all. It's all first. Also, you mentioned low LTV. I mean, our maximum LTV is 65%. And in fact, probably our blended LTV as we get going is probably going to be lower than that. Because a lot of times what you get is you get a guy who comes to you and says, hey, I need, maybe 40% on this deal. I don't quite have enough money, and that's like a perfect deal for us because we come in at such a low LTV. So I think our blended will probably be lower, but right now our max is going to be 65%.
Tell me about the kind of terms that you provide the borrower.
The borrower, okay. I mean, again, we have a whole table, and obviously it's hard to show right here, but we have typically our rates are between 12 to 16%,
yep.
and our points are 4 to 6 points. So that's our
okay. So
rate.
you're charging the borrower 12 to 16%.
Correct.
Okay, and then you receive origination points
Correct.
for doing the underwriting and mm-hmm. so forth. Mm-hmm. What does the investor get? And how are they protected?
How are they protected? Yeah, again, it's, one of the things I always like to say anytime I talk to any potential investor is that we're about safety and security. This is really what we're about. I have my own money in the fund. I have a partner in the fund as well. He has his money in the fund. So we're investing side by side with our investors. And
on the same terms?
On the same terms. Everything's exactly the same. And, it's really about safety and security. It's really about preservation of capital. So we would rather turn down a deal than, invest in something and lose capital. So, again, they're protected because it's only first trust. It's extremely low LTV. So let's say something did go wrong with the project, we could take it over in-house and do the deal and get it done and then get our investors' money back and probably actually make more money for the fund that way. Although that's not our, not our plan. So really, it's a secure and safe, investment for the investor.
And when we talk about safe and secure, we also have to factor in coupon rate mm-hmm. for the investors. So if an investor comes to Saxena Capital Partners, mm-hmm. what kind of return are they looking at?
Right. Typically, we have we call it 8% preferred return. So that means that as the fund makes money or gets capital return, the very first thing gets paid out is to the investors, 8%. So no management fees or anything else that we take out.
They're paid first.
They're paid first, 8%.
Before you?
Before me, absolutely. So
right.
that's the way it works. Our target rate is actually 12%. So our goal is to get our investors to 12% in the fund, which I'm I feel very strongly we can do because we've got this opportunity to do not only hard money loans, but other things as well. Mm-hmm. But again, our preferred is 8% where the investors get paid back. And then after that, we do take some, fees and stuff before we get to the 12%.
All right, so the 8% is a preferred dividend yield. Mm-hmm. Your money is invested along with your partner's money.
Absolutely.
So you get paid as the investor gets paid. Mm-hmm. So how do they get from 8 to 12?
What we do is, it's at that point, it's a I guess, I don't know what the exact right word is, but maybe a profit sharing where it's a 50-50 split. So anything,
okay.
Yeah, anything over that.
All right, so it's okay. So it's 8%, and the fund does well. The fund manager and the investors will split the profit 50-50 up until 12 points.
Correct.
It's capped at 12. Anything over 12 goes to you.
Correct.
Okay, you as the fund manager.
Right.
So you're anticipating 8% as a minimum target rate up to 12%.
Correct. Yeah, absolutely.
Okay. Now, in terms of a lot of investors who watch our program utilize and deploy capital using their self-directed IRA. Is this option available to those investors? And if so, tell me how that works.
Okay. Yeah, option is absolutely available, and I think it's a great option, in fact. So anyone who has an IRA or a 401k can participate through their IRA, and we use a company called NewView, which I know you're familiar with.
Glen Mather.
Exactly.
My friends at Glen Mather at
they're-
NewView, yes.
Exactly. They're based out of Florida. Excellent company. I've met Glenn and most of his team. They're really excellent people. And basically, it's very simple. We actually have a program already set up with NewView.
Yes.
So the investor comes in. It's very quick paperwork. They open up an IRA. IRA gets funded at NewView, and then they can start deploying that, in our fund. It takes a day or two. Really, it's that quick. And I mean, it's probably we don't have enough time today to talk about all the advantages of investing through your IRA. But I mean, it's really a great way to go. In fact, I have my own self-directed IRA, and that's how I invest my IRA funds. But it's obviously all tax-free. It's all done within the IRA. So there's a lot of advantages to that. And we have a lot of clients who go that direction. And also, especially when you consider, what are your options? When you're looking at the stock market or a money market, really the returns are not that good right now.
Well, what I like about the IRA concept is you're not asking the investor to deploy any additional monies in the market. You're really asking the investor to redirect a portion of what they have in the marketplace into perhaps real estate and with you.
Correct. I think it's a great diversification. I always, say, that you shouldn't put all your money in one thing anyway.
Yes.
So this is a great way to diversify it. And again, the nice thing with us is you know your return that you're getting. You're going to get that 8%. You put your money in the stock market. Sometimes you'll get it, sometimes you won't. There's no guarantee. So I think this is really a nice way, and we found the investors that invest with us, they kind of keep coming back, and they really like this model.
So the way the fund functions, and I just want our viewers to understand it. What you've created is a real estate fund. And a real estate fund, by definition, is you get a number of investors who deploy capital into the fund. You have your money and also your partner's money in that same fund.
Side by side.
Correct. And that money then is deployed into the marketplace. And depending on the type of financial contribution the investor has, they have that pro rata share of the actual deed of trust.
Correct. Yep.
Okay. So you may have 30 projects. So it takes the risk out of buying a one-off. Let's say, you offered a deed of trust to one particular property. It gives them the opportunity to participate in all the properties, not unlike a mutual fund.
Yeah, exactly. Again, it goes back to the diversification. If you take your money and put it in one deal, to me that's more risky because if that one deal goes bad, you're going to get hurt. But if you're spreading your risk over 30 deals, then it really reduces your risk significantly. So that's why I like the model.
Talk to me a little bit about. I want to get back to safety and security because I know that's what a lot of investors are concerned with. Talk to me a little bit more about LTV. Some people may not understand what that means.
Sure.
And how that factors in so an investor can feel secure.
Okay. The simplest way to explain it is, if you're buying a property, let's just say you're going out to buy a property whether investment or not, let's say it's worth $1 million. Your loan to value is essentially what is the bank or a hard money lender going to loan against that. So typically, I mean, in the marketplace with regular banks, we're seeing probably 80% LTV right now if you go to buy a house. I'm already seeing some 90% LTVs where the bank is willing to loan that much, 80 to 90% of the $1 million. In our situation, we are capped at 65%. So the maximum we could loan against that property would be $650,000. So as you can imagine, that lowers our risk because if the borrower buys it at $1 million and we only have $650,000 invested in the property, if something were to go wrong, we have a $450,000 cushion.
Yes.
Where we can, we're not losing our money. So
yes,
it's actually very conservative. Our LTV is actually more conservative than traditional banks. If you go out to Bank of America or something like that.
Now I also understand you've created a board of advisors.
Absolutely. Yep.
Talk to me a little bit about that, and how do they guide you? What's their function?
Okay, yeah, I've we didn't get into my entire background, but I've run other companies before as well. I really strongly believe in a board of advisors. It's just good to have industry professionals around you that if any questions come up, you can give them a call. We have on our current board, we have a few people that are in real estate sales. In fact, I was just on the phone with one of them right now, talking about a potential deal. But so we have kind of a well-rounded board. We have people that are in real estate sales. We have title attorneys who know that side of it.
And they're part of your board of advisors?
Exactly, right.
Okay.
And if you go to our website, you can actually see their
well, we'll get to that at the end.
At the end, okay. Yeah, so you can actually see who they are. But we have some traditional bankers on our website as well. So you can, I'm sorry, not our website, but our board of directors, board of advisors. So any banking questions, finance questions, we can go to them. We have a very well-known real estate attorney that does Washington, D.C. market. Mm-hmm. He also is a developer himself, so he brings a lot of expertise. I was having some conversation with him about a week ago about bringing some investors on board. So it just really helps because anytime we have a question or an issue, we can just reach out to one of them, and it gets us moving forward.
So where you're at in the project is you created the fund, mm-hmm. And you've have a dedicated website. Mm-hmm. What's the website address for the fund?
Yeah, the website is saxenacapitalpartners.com. Saxena is spelled S as in Sam, A-X-E-N-A, saxenacapitalpartners.com. Okay,
and then how could somebody reach you? Do you have a phone number they can reach you directly?
Absolutely. The phone number is area code 703-508-4421. Again, it's 703-508-4421.
And this type of investment, we want to be clear, is for accredited investors.
Mm-hmm. Correct.
And I think on your site that information is clearly provided, what an accredited investor is. And in closing, if you had one comment to say to an investor mm-hmm. about your fund, what would that comment be?
For me, it's safety and security. I mean, I've done well over my career, and it's really by being safe and secure. We're not here to take high risk investments. In fact, we'll turn down anything that we don't think is exactly meeting our criteria. So I think real estate's a great investment. I think throughout the world it's a great investment. It always has been, always will be. And I really think it's a great way to make money. I think you invest in something safe and secure, you get what I consider a very good return, especially considering your alternatives right now. That's where all my money is, I can tell you. I mean, that's what I do. So I do exactly what I'm talking about right here.
Well, great. Well, we're going to close up, and I just want to say we appreciate you coming to our studios and visiting with us. And again, that's Sunil Saxena. And your website one more time?
It's saxenacapitalpartners.com.
Good. And so thank you so much for coming. I appreciate it. This is Leonard Rosen for Financial News with Leonard Rosen. Make all your investments great ones. See you next time.